from the coffee break. I hope you're refreshed and ready for some more rejuvenating and expert content. So the rest of the day we'll actually dive much deeper into banking, and also we will end on the future of banking. And interestingly enough, we did hear Ben Caldecott flag the thing that we actually have a lot of people working on sustainability now in central banks and on prudential supervision. So you will have the opportunity to ask them all the difficult questions. We will have a nice selection of experts from different central banks later. But with this, I would like to introduce the next segment, the next presentation. We are very excited to welcome back Radek Lastovicka from Ernst & Young. He's a senior manager for financial services. He was a presenter also last year together with another person, from Petra Ondroshova from Česká. It was a great presentation. It received some of the highest scores because it was very practical. You showed how you did the materiality assessment, people had questions, it was great. So now we're going to repeat this success and look at the quantifications of climate impacts on a bank. And with that, I would also like to welcome Petr Franěk from Česká spořitelna. And the two gentlemen will tell you about the climate scenario analysis that they carried out. So enjoy, and the floor is yours.
Thank you very much, Linda. Great pleasure to be here with you today. And let me just say that last year we presented with Petra practical insights into how we cooperated on double materiality assessment in Česká spořitelna, and I believe the joint presentation of consultant and the bank worked very well, and therefore I'm really excited that this year I can again present with a representative of Česká spořitelna, but now on a more technical topic, now on climate scenario stress testing or climate scenario analysis. Over to you, Petr.
Thank you very much. I was a little bit worried to come here today because I saw yesterday a big interest in saving the planet and how to contribute to decarbonize the economy. And I'm today from a position of, I would say, greedy banker, because I'm here, I will be speaking about saving the bank, but I very much like the presentation from OTP Bank, so I'm not greedy, I'm pragmatic, yeah, so it will be a rather pragmatic view. Motivation why we are here, and we will be speaking about, let's say, a common project that we performed with EY. The motivation is that yes, we admitted that the climate change is real. You know that in the Czech Republic it took quite a while to somehow came to this conclusion. But I think now everybody understands that something is going on with the climate. And of course it has its opportunities, and we heard a lot about investments and green finance in previous 2 days. But of course it brings also threats. And I am responsible for risk management in Česká spořitelna. You know, I think I don't have to introduce Česká spořitelna. We are the biggest bank on the Czech market, wholesale bank, and we have, let's say, big retail portfolio, but also, let's say, big corporate portfolio. And namely, the threat comes from the corporate portfolio side, because the climate change will affect some of our clients. And this can be very briefly, let's say, summarized on this slide. So climate change is real, it's there. It's manifested through two risks, physical risks and transition risks. Physical risks are risks that something will be damaged by the weather condition, floods and winds and so on. And the transition risk are basically damages, I would call it, caused by the regulations and legislation being introduced to protect to lower the physical risks. Yeah. One risk or another the outcome are, I would call it stranded assets. We heard a lot about stranded assets in the previous discussion. The stranded assets are, or clients are assets or clients that are that become, I would say, or that get into troubles because of the risks coming from climate change. And if so, you can imagine if you have power plant that needs water for cooling, and there is water shortage because of the drought, you have stranded asset, yeah, and so on. And if some asset and or client becomes stranded, it means risk for us as a bank, because there is increased risk coming from this client and the potential loss. So, from this greedy or pragmatic point of view, our goal, how to manage the climate risks, would be to avoid these stranded assets or potentially stranded assets and clients in the future. The key question is, of course, which assets and clients will be stranded in the future. And this is the issue, that there are too many possible futures because we don't know how quickly and how deeply the regulations will be introduced, and therefore who will be affected. We all know the NGFS scenarios. They are somehow shown on this table. The issue is, or the issue from risk management point of view, is that in each scenario, different clients are suffering and being in risk of being stranded. So our question was whether we might be able to model the impact of the different scenario to our corporate clients and assess the impact of the scenario on the given client, and of course then on the portfolio. And this was our question when we approached colleagues from EY with the question whether it is possible to model the impact of climate scenarios on corporate clients, and EY, of course, answered that yes, they are able.
Thank you, Peter, for this promotion. In fact, I should give a big gratitude to Peter and his team, because we jointly developed the methodology. We had not much in the shelf to put up on the table and say, this is how we will do it. And actually, during the course of the project, during the course of the cooperation, we explored together some dead angles which we have to avoid and shift our approach. Before diving into the final approach which we have developed, let me say that in my 15 years career in consulting for banks, vast majority of my jobs is to help banks to get compliant with regulation, compliance with new regulations, compliance with findings of on-site inspections of regulator. These are the typical projects we do. And just once upon a time, there is coming a project where the bank is really interested in something business-related, like in this case, and it is always a big, big pleasure to do something what is purpose-driven, not regulatory-driven. So, the overall approach. As Petr showed on one of the slides, we start with identifying the scenario. It could be a stressed scenario, it could be some whatever other scenario which brings the variables which we need for stress testing or for adjusting the corporate future, or reflecting them in the corporate future. Historically, we have seen that a couple of banks 5-10 years ago were always starting with developing their own climate stress scenario, and only then started model the impacts. I believe there is a big shift in last 3 to maybe 5 years where the NGFS scenario becomes standard. It is the benchmarking scenario for banking sector. If a bank is going to make any kind of climate scenario analysis, it's always worth of starting with NGFS scenario because it's a common practice. On top of that, you can think about developing some additional own stressed, whatever scenarios, but NGFS is what today nearly everybody is using, and you would be an exception if you would not use NGFS scenarios. What we did with those NGFS scenarios, we took their projections. Actually, at the beginning, Česká spořitelna selected the 3 main NGFS scenarios they want to focus on, and we took the data provided in those scenarios for modeling financial statements of corporates. So we agreed on the time horizon till 2040, last year it was 16 years of outlook period. And the first task for us was to take the scenario and for each and every company to project their financial statements for their next 16 years to 2040 according to the selected climate scenarios. Then the calculations were relatively straightforward. Once we have the climate scenario adjusted financials, we plug them into existing ratings model of a bank. After obtaining climate-adjusted ratings, we plug them into existing calculation of loan loss provision and capital adequacy of the bank, and we can compare the results of those calculations. So we can compare how much the capital will get impacted for the bank based on the scenario and how much expected losses will change based on the scenario per portfolio. And Petr will show later how individual sectors' impact might be analyzed. I have not mentioned the step which is highlighted in the middle there, and this is a top-down approach. Basically, all those projects starting with a bottom-up recalculation on the firm level typically end up with the need to have a simplified, modeled approach which can operationalize this relatively complex exercise to something more simple and more easy to implement in the bank. But I will get to that in more detail on later slides. Now,
maybe Radku, why only 15 years, you may ask? And that's because we are pragmatic. Yeah? Because the climate change takes much more higher or longer horizons, but basically we need a model to show us the way how to adjust the lending strategies and to avoid these stranded assets. And basically, if we do something today in the horizon of 15 years, generally the portfolio will be completely renewed. So that's why we did not focus on longer horizons, because we need a tool that will show us what to do today to be safe in 10 to 15 years.
But the good news is that NGFS scenarios provide the data till 2050. So if there would be some very long-term oriented bank, the calculations, the same approach can be applied for years till 2050. Now, bottom-up calculations, modeling financial statements of each and every corporate client of the bank. There were thousands of them in the bank, and modeling their financial statements for the next 15 years. How we did that? Central role in our approach is played by energy mix. So we start with either observing energy mix of the company, and you might be aware of the need to gather the information about the energy mix of the companies, because CSRD reporting under climate change requires that to be reported. Nowadays, I would guess non-bank on this market has full portfolio covered by insights about current energy mix of their corporate clients. So there is a need for certain approximations or modeling. We have leveraged Eurostat data to model the current energy mix based on the industry data from Eurostat to have the current energy mix of companies in individual sectors. Now, the next step for us was to take the NGFS data and to model the future energy mix. Again, per each and every company and each and every future year for those 15, 16 years ahead, we have modeled the energy mix, which reflects first the investments to energy savings, so energy efficiency, which might decrease the overall energy consumption, and also the investments for greening the individual energy mix. So again, based on NGFS sectoral data, we plugged them in and calculated the evolution of energy mix of the companies. Now, NGFS provides a lot of financial data, but also, very importantly, it provides data about how costly it is to green the energy mix in individual industries, and what will be the costs of the primary energy sources. So each scenario has data how much will what will be the gas price in the following years, how will develop the price of whatever biomass energy, and so on. So once we have the energy mix, we can directly calculate the impacts on operational costs, the costs for buying the biomass energy, buying coal energy, and so on, based on that concrete energy mix of the company, as well as the energy mix drives the investments, the capex, because this is what the NGFS scenarios provide. We plugged those inputs into calculations. I will talk about that in the next slide, but now let me just demonstrate for delayed transition one concrete company. The very first what we started with is energy mix like this. Some savings of the energy over the time and much higher proportion of green energy sources in the future compared to today. So for thousands and thousands of companies, we have calculated this. What we did afterwards, it looks quite messy, and it is. Imagine the financial statements recorded in the bank's database have over 2,000 items, like 50 items for balance sheet, maybe 70 items for profit and loss, and some others for cash flow statements. And for each and every this item in the financial statements, we said, well, this one is not getting to be impacted by the projection, or this one will follow certain data from NGFS scenario, like net sales will follow the GDP growth forecasts. So we said sales will grow in line with GDP growth projected for that country in the NGFS scenario. And as I said, most importantly, there were the projections impacting the costs, capex and opex, driven by that energy mix. Just to say a bit more, final word to this complex and non-transparent slide, the balancing mechanism there is in depth. So if the profitability and the cash flow doesn't generate enough money for the bank to invest for the necessary investments for projected greening of their energy mix, we assume that the bank takes additional debt, which then increases the costs, and so on and so on. So the balancing goes through debt rising in the need for additional cash. Okay, and now the top-down. As I said, all the projects, and EY does a lot of them, particularly in UK and Canada and in Far East, all of them resulted in a need to have something a bit more simple to operationalize it for regular calculations. So basically, what we get from the bottom-up calculations is that based on the climate scenario-adjusted financials, climate scenario-adjusted ratings are calculated. Here on this slide, we demonstrate for a concrete scenario and concrete portfolio of Česká, net zero scenario, what is the rating change. So basically it shows that the highest impact of this scenario on the portfolio of Česká spořitelna is around year 2035, and the average, which is the yellow line, the mean rating deterioration will be by more than 2 notches, but there will be companies where the rating will deteriorate just by 1 notch, and other companies where the ratings will deteriorate by 3 notches. And this might be a bit different according to the segments. Energy might look like a bit different than transportation, than some other industries. So in fact, we got over the time bigger fluctuations, typically ranging from up to 3 notches deterioration to 1 notch improvement in the time. So the task for top-down is, instead of calculating thousands and thousands of financial statements with hundreds of variables in those statements, we can create a model which just takes a few variables and predicts how to fit this curve, this spread. This is a very simple example how such model can look like, a decision tree. Typically, the decision tree in practice was not just 2 layers, but 3 or 4 layers. But anyway, it shows that you might have only a few most relevant indicators which allow you to predict the rating change for particular year, particular portfolio for the next period. So the big advantage of this top-down approach is that in practice we ended up with something like 9 indicators based on which for all the clients of Česká spořitelna we can with good accuracy predict the rating change, which would be otherwise calculated by the very lengthy and complex bottom-up calculations. Now over to you, Peter.
Yes. So you may ask whether such complex model works. That's why I will show a couple of results for our portfolio. So this is the rating change for the 3 scenarios that we chose for the modeling. We were a little bit surprised that, let's say, we don't see any Armageddon in the graphs. Yeah. If you have a stress testing tool, how we called it in the beginning, you would expect some stress picture. It's not so. You can see that, let's say, on the general distribution of rating is not changing too much in the 3 different scenarios. Yet you can see that in the net zero scenario in the year 2030, which is the most the scenarios with the highest transition risk, the spread of the rating grades is bigger than in case of, let's say, delayed transition and so on. So it was a little bit surprising, but then two notes should be made. Firstly, the model does not predict defaults. Basically, in the calculation, all clients survive. Only, let's say, their financials may be negatively impacted and worsened by the additional capital costs and loans. So that's one thing. And second thing is that it's not stress testing exercise. We are just, let's say, looking at the different possibilities of the future development. Yeah. But if we do go deeper and look at the different industries, then I think this is the impact to expected loss. The overall impact that we calculated was somewhere between 0 and 15 percentage points, both on expected loss and capital needed, which is not a little number. 15% of the total expected loss is quite a big number for Česká. And looking at the distribution in industry segments, you can see that, let's say, the model gives, I would say, logical outcomes. Yeah, the typical suspects like transportation or real estate are suffering more in the more harsh scenarios than, for example, TMT, which they are fine in no matter what's going on. Yeah. So we were quite happy with this outcome, and I mean this is the proof that the model works and can be used. We will be using it for simulation of the portfolio and then sensitivity analysis. We will be using for CSRD for the double materiality assessment. The first round we did on expert basis. Now we will be able to evaluate the loss. And of course, we will be using this model as a basis for discussion about the future strategies towards the different industry segments. Back to you.
Thank you. Last note. Česká spořitelna is one of a few visionary banks which is very open in sharing the knowledge and methodology developed there. So we were, maybe it's too high word, but we were allowed by Česká to leverage the methodology which we have together developed for our offerings in other banks, and we have created a tool which looks pretty simple at the end, where you basically choose the scenario you want to work with, the data source, the place where the final data should be stored, the results should be stored, whether you want to calculate for just one client or one segment or full portfolio, press the button and have the results. So we are happy to go on that, with that on the market. Thank you. Any questions? Great.
Hi, I'm Gabor Siga from OTP Bank. I just wonder, how did you include in your model demand elasticity? I mean, if I understand it correctly, you basically shock the company's balance P&Ls by having the cost shock through increasing energy prices. But different companies have different abilities to pass on those shocks on customers. So I think that is one of the lessons learned from the energy crisis after the full-scale invasion of Russia on the Ukraine, that not always the energy-intensive industries suffer, because some of them provide essential products that clients buy even if they are expensive, like heating, whereas some companies have less energy-intensive products, but clients are able to forego them easier, like, I don't know, hairdressing. So how did you account for this? Because I think this is an important factor. Thanks.
Thank you very much for this question. I will briefly react and Petr will definitely follow. These were discussions which we had in first months of our cooperation very much in detail. My view on elasticity of demand, I will have two remarks. First, we have no models and assumptions in our bottom-up evaluation. We just took the data from the NGFS scenarios, and by those growth rate given there, we multiplied the financial statements. No modeling, no estimations, just recalculation given the scenario data. So it's first remark. Second remark, we were exploring how to model long-term elasticity of demand, and we came to the conclusion that there is a risk that any long-term modeling of elasticity of demand is so imprecise that it would bring more shadow than clarity to our model. So it's not there.
I'm not expert in the interior of the model. That's rather, let's say, Radek and his guys, and then my modeling guys. But as Radek said, we use majority of the development variables from the scenarios. So, and in these scenarios, there is also, for different industry segments, there is the, I don't know, the revenues model predicted in the part of the scenarios. So the model is somehow, let's say, factoring the projected development from the scenario. Again, we were not, let's say, focused on modeling the future with 100% precision. It's rather a tool that would help us to quantify the impact on, let's say, portfolio level. But we wanted to be able to go to the level of the different clients, because in given a segment, there are clients that are different conditions at the beginning. Yeah.
Okay, thank you very much. With that, unfortunately, we have to close, but thank you so much for a great presentation. Really great presentation. So that was a second glimpse of things happening in practice and things changing in practice. So now it is actually time to move on to the next one. So the next session, we have the great pleasure to welcome CEO of Czech Green Building Council, Simona Kalvoda. And if you haven't met her, she is probably the greatest superstar in Czech Republic and across the region. She is driving a lot of actual real-world change in the built environment and real estate. She's running a huge association that keeps growing, and they're doing excellent work, if you haven't heard of it, on the EU taxonomy, interpretation and use for banks. Actually, I would say that it is probably one of the best examples of how an association can develop something that's practically usable. So please check it out. And also, we have Libor Vošický. Thank you very much for joining us. He is the chairman of the board of directors of Stavební, spořitelna, České, spořitelny. Excuse my Czech, and chairman of the Association of Czech Building Savings Banks. So thank you so much for joining us, and the floor is all yours.
Thank you very much, Linda, for the introduction. I'm afraid that you may have raised the expectations too much. So anyway, anything what Linda said is true. Ladies and gentlemen, welcome to the session today on accelerating the renovation and energy efficiency. Energy efficiency, energy savings, energy security has been recently much debated issues, and I have the most probably relevant person here to talk about how the progress of energy savings is doing in Czech Republic, and what are your experience in this area?
Good morning. Thank you for inviting me. Yes, as it was said, it's a very important and very interesting area, because the buildings as such are creating approximately 30 to 40% of all consumption of energy in Czech Republic. It's very much similar to the Europe as well, so it's not a specific of Czech Republic. And if we want to get into more energy efficient and also save CO2, then it's very necessary to decrease the consumption of households, especially households in energies, which is mainly needed for heating. And our bank or our sector of building societies banks, which are specialized banks focusing on financing households and things about the flats and living, then we are very much cooperating with the state, because saving of energy is not just in interest of individual households, but it's very much in interest also of the state.
Sure. There are many national programs, government programs for subsidies. There is legislation, there is regulation, but banks certainly have a role to play in the accelerating progress of energy savings. So what is the role of the banks in this process?
Maybe I will start with a few figures. Based on our analysis, which were created by KPMG, there will be need of approximately 75 billion Czech crowns yearly to invest into energy savings of the buildings, and this amount obviously is not in full paid or in state capability to pay, either in subsidy or in loans. Therefore, to invest into energy savings, you need capital from the private sector, which is the banks, to providing capital, and also you need a capital which is created on the national funds. And that's our role, that we are combining these funds to provide enough capital to incentivize people and households to invest into their own energy savings of the houses.
So what do you perceive to be the key barriers in what you just described? What should really change, or what do you need as a banking institution to happen so that you can provide better conditions for loans? And also, what is the motivation for the end user to either build a new house that is energy efficient or renovate in the most effective way?
Well, there are many barriers. It's a very complex exercise. People are very much, let's say, uninterested in investing into their own housing because of saving environment. This is something which it's obviously, if you ask them, everyone tells you, or almost everyone tells you, that it's very important, but the people are not ready to invest their own money to save environment because they don't simply see it. So what is very important is to show that investing into own property is creating for them savings on monthly basis, meaning that if they do complex energy savings on their houses, then immediately on monthly basis they are saving money on less paying for the energy, and the debt which they have to take, or many of them have to take for the investment, is less than the saving that is provided on monthly basis. And it works. That's something which is for them very relevant. They can even increase the value of the property, and that's something which works. But if I can say what is let's say most known barriers, I would say it's informations. People, we are talking about the mass market. where we need to very much focus, and they are not very much ready to search for the informations about a subsidy, how to finance the energy saving project, where to create or where to ask for energy project, and last but not least, obviously, the company which is finally a construction company which is finally realizing this energy saving isolation. It's also very tricky because there are many of them on the market, but not all of them are obviously good enough to do it in the right way. So what we are doing on top of providing the capital to the market is also that we are trying to do very clear and detailed providing information. So we are trying also include it into our business the informations how people can do from A to Z the whole renovation, and that's something which also very much helping. And because the banks has got a large network of branches and also are very much, I would say, advanced in online, then it's something which is helping people a lot, and obviously helping solving the issue.
That sounds really good. Your consultation services for the applicants for the loan. Of course, there are other instruments that may, in near future, help you, which might be the renovation passport. Please do not mistake it for PEMP, for the energy passport, because the renovation passport should really give the people a sort of a method how to renovate their building efficiently. For example, start first with the envelope, sort out the insulation, and then go to the technology. So I guess that this might help you and your consultants as well. What do you think should really change significantly to remove these barriers?
Well, you started with energy passports. What we are also lacking is the data. So there is no requirement of households to provide the data to some certain central database that we know exactly how inefficient is the house they live in. So also creating the database where the government is and maybe not on the level of the state, but maybe on the level of state funds, are having data and are able to incentivize people, maybe not everyone with the same amount of money, but can be adjusted to the needs of each individual households based on data. It also would help very much.
Yeah, we also have the same sort of opinion about the lack of data completely, because whatever exists, then it's under the GDPR, so you have very sort of complicated access to this data. However, I know that the Ministry for Trade and Industry is working on this database the databáze energetické náročnosti. I'm afraid it's going to be, if it's going to be functional, it's going to be June next year, just to collide with the EPBD implementation. So let's hope that the database will be soon here. Any other thoughts about perhaps what's the state's role in this whole process? Because they should be the role example. they should have the example of renovating their own houses, and we all know that it's really lacking. It's no 3% per year, it's 1.5%, and that's it. So you think that the state should take a quicker pace, or what should really happen in this respect?
Well, I think state in Czech Republic is doing a great job. I really must say that, because we've been working closely over 1 year on this area. And what is very unique is that state in cooperation with the building societies creating the loan, which is subsidized loan on interest rate. And we are combining funds which are in a state fund with a loan which is providing by private banks. And the final product for financing is a half of the interest rate which is on the market. Give you example, if the 20-year loan, unsecured loan for renovation is now roughly about 5% on the market in Czech crowns, then the combination of funds which are creating or which are sitting in the states are half of the loan. Then the interest rate for the household is 2.5%. And a combination of subsidy and a cheap loan is really helping people to save money on a monthly basis. And then obviously it's incentivize people to start thinking about the own savings of the houses. So this economic principles really works the best from our experience. And also the banks can provide very much a lot of information to the state, because we are a provider of the credit for each individual. And we know exactly who is asking for the loan. We know exactly who is actually getting this loan, because fulfilling all regulatory needs of having sufficient fund for repayments. And we are discussing very frequently with the state to fine-tune the program that it fits not just the high earning households, but obviously it's targeting lower earning households, because they are usually the most hit by the prices of energy, and they don't very much often don't have enough information, and they are not able to, let's say, seek on their own for the information. And finally, they are completely lost in area of financing and I would say education of how the loan works, how they will pay it back, and they are afraid of it. So this is also the very much role of the banks. And I personally believe that only the combination of the banks, which are very strong in the datas and the capital, can help state and people to let's say accelerate energy savings of households or the flats.
Yeah, from what I hear, what you said is that communication between all the stakeholders and between the sectors is absolutely crucial. You also mentioned before the accessibility of financing for all the income tiers of the inhabitants. How about the simplicity of the process? Is it simple enough? Is it motivating the people, or is there anything that has to be modified, changed? What do you think?
Well, it's improving. Not so ideal. Obviously, you know, we have a very clear message, and it's implement now, improve later. It works. So we are learning and improving. I give you an example. We started co-financing with a state fund of environment, and people were getting money ex post. And that was the very much issue, because everyone who asked for the grant or for the subsidy, they didn't know at the beginning whether they will get it or not, because it will depend on how much energy they will save. And obviously, for less earning households to spend let's say 50,000 Czech crowns on an energy project without knowing that they will be eligible for the grant or for the financing, it's a showstopper. So we discussed that many times with the state fund, and finally people are now getting money ex ante, which very much helps them to let's say think about the investment or the energy renovation. And these are the small details which, but in a final stage, is moving things forward. And these, I would say, showstoppers are many on the way, including the informations, including the helping that we want to help people also to administrate the request for the subsidy. We've got a team of, in Česká, we've got a team of approximately 12 people who are daily working on a communication with our client, what they need to do, what they can expect, what's the timing, how to fulfill the requestment, because it's very complicated, or sometimes request for a subsidy, and so on, so on. So these are really many details, but from our experience, the major issue is always whether the question which everyone's got, will I have a money on it? How much I will pay, how much I will save, and where I'll define the construction company which will do the work or do the isolation for my building, for my house, apartment house or detached house.
Yes, that brings me to another question. The awareness of the end user, of the public, is on one side, and then there is the expertise of the consultants and of the suppliers. Do you think that there is the expertise is on sufficient level? There is enough people who can serve the population, or is it something that needs to be changed as well?
Well, we will. I'm afraid that we will never have enough people to serve and provide informations, and we need to use digital channels. That's for sure. Even in Česká, Česká spořitelna, we are not training people on branches to help people. We need to have a team which is daily updated, which is well educated, and you can do it just if the team is sitting together, learning from each other, and providing the informations via video calls or digitally. And that's only the way how we can do it. So digitalization in this process, it's a must. You know, we've got a population of 10 million people. We have houses approximately, there is a 4.5 million flats, and it's from our analysis approximately 500,000 flats and 100,000 apartment houses are energy inefficient. What means inefficient? They are consuming about 2/3 more energy for heating. They should, which means in terms of money, they are spending half of the money for the energy which they don't need. And to service this amount of households, it's undoable by physical let's say, help or physical information. So you need to really, include the digital advisory and digital channels, even for providing the loans.
Well, I've got good news for you. The Czech Green Building Council has got the energy efficiency, energy savings, and all the stuff related to that as one of our key issues. So we've been working quite closely with all the relevant ministries. The Czech GBC is being involved in the implementation of the EPBD4. So we have the market view and market comments on how the EPBD should be really implemented, and we're working, as I said, very closely with the MPO. Also, as you mentioned, the media or general awareness, we absolutely agree that there is very low level of awareness of the benefits of the renovation, of the sustainability in buildings. So we've been working quite systematically on that. And I know that you as a member, very, very nice and big member, we've been working with you and your colleague on promoting the issue, and together even with the Ministry for Trade and Industry, we've got some campaign to promote the whole thing. So I guess that we are all on the right track. As Sean Kidney yesterday said in his last sentence, the train has already left the station, so there is no turning back, which I think was very positive. What do you think would be the punchline? Our time is just getting close, and we should leave some time for the questions. What's your punchline?
Maybe I will mention one more thing, which is quite political, and we've got elections in autumn in Czech Republic, so no one talks about it, and it's CO2 allowances for households. It's also, I would say, a big game changer, because we still don't know how much it's gonna be. It's said that it might be about 30 euros per allowances. However, it will definitely not lower the price of the energy. And times when the energy was cheap are over. The same as the days are over, then interest rates will drop to zero, as it was 6-7 years ago. And in these terms, there are many things which are on the way, which we will have to overcome. And obviously, we need to have a constructive dialogue with the state, with the government, because it's our common interest to have a good environment where we live, not just for us, but mainly for our children. And obviously, we need to save some energy and have a energy efficient energy sources that we can increase the energy volume at the same time to save something, to have a capacity in energy for the future. And that's, in my opinion, it's not a challenge, it's a must.
Yeah, I think I can't agree more.
Thank you very much.
Thank you.
I don't know whether you want a question from the audience, if anybody has any burning question. Anyone? No, they're processing. Thank you so much for joining us today. It was a real pleasure, super interesting. Thank you, and give another round of applause for Simona and Libor.
Thank you for listening.
Thank you very much.
Thank you. And with that, we actually move on to the next session, which will explore in more depth what is happening with supervision. So as already we have mentioned before, there has been quite a lot of activity. We heard from Professor Irene Monasterolo on Monday about NGFS short-term scenarios. So now you will have the pleasure to listen to 4 central bankers and actually 2 academics and 3 central bankers, excuse me. These are people who have worked on these topics for a long time. So I do think if you actually compiled a list of top 30 most competent people on central banking and climate risk and sustainability, all of these people would be featured. So we are very, very lucky and honored to welcome to the stage Pierre Schlosser, Deputy Director of Schumann Center and the Florence School of Banking and Finance at the EUI in Florence. Thank you. We have Rainer Martin, the Executive Director of National Bank of Slovakia. Next up, we have Adam Banai, the Executive Director of Monetary Policy Instruments, Financial Stability and Foreign Reserve Management, Magyar National Bank. Welcome. Some people have very long titles. This is getting difficult. Agnieszka Smolenska, a fantastic academic and one of the people working at CETEX, which is a new center at the London School of Economics. And last but not least, we're running out of time, so I'm speeding up. Last but not least, we have absolute pleasure to also welcome Mariam Karashvili, Head of Financial Stability Analysis and Macro Financial Modeling Division, Central Bank of Georgia. Thank you so much.
Thank you very much. Is this working? Yes. Thank you very much, Linda. Thank you for the invitation. It's a real pleasure to be here. We're going to switch a bit focus right now. We've talked about a lot of the private practices happening. We'll shift towards the world of central banking, and we'll make sure that we also give credit to what has been done, to the limitations, to the difficulties, to the challenges. So my name is Per Schlosser. I'm an assistant professor of political economy at the European University Institute. I'm going to be your moderator for the first phase of this session, and Agnieszka kindly agreed, because we're running out of time, to really step in and be the second moderator in the second step. So the speakers have been introduced to you. What we're going to do is that we're going to speak about the different instruments, of course, that the central banking are using to fight climate change, but we're going to do that really step by step and go progressively in that conversation. And then we'll open the floor, so you're going to be able to ask questions. If there's anything that is unclear on the way, feel free to intervene, raise your hand, ask a clarification question. This is fully okay. Rainer, let me start with you. So can you guide us a bit through the different, let's say, the action repertoire of central banks on the, let's say, I mean, on the one hand, of course, the measurement and management of climate risks, but on the other, also generally advancing this analytical conversation. You've been quite active in your bank on this.
Okay, thank you very much, Pierre, and well, a good, very late morning to you. Bon appetit, almost, after this. Right, so let me take you a little bit through that, and I would distinguish 3 main areas where central banks and regulators have been active. So the first one, obviously, this is the field of regulation and supervision. And I think what we've been doing in this area is mostly what financial stability people would describe as a risk identification and assessment. So this starts basically with generating a database, a solid information space that you have. So all the work on disclosure requirements, transparency rules, and so on, which we have discussed already a lot in this context. And then, of course, the question is, once you have that, you have to bring it into a structured way of thinking. And for that, what we typically use is stress testing. And I mean, a big thanks to the colleagues who just presented the stress test of Česká spořitelna, which I think is a very interesting case. So on that, I don't want to go into any details, but I think that the stress testing and what we've done in this area is really a big step forward. But, and there's a big but, what it typically yields is rather limited damage. I think you mentioned the word, there's no Armageddon. Definitely no Armageddon in all the results that I've seen and exercises that I've seen. And I think we still need to look at that again and see why is that. And I think there are some structural features that you typically have in stress tests, like the static balance sheet assumption, the assumption that the structure of the economy doesn't change. So that probably prevents us from, or leads us to an under-identification of the possible risks. Anyway, I don't want to belittle this. I think the stress testing is a big step forward. Then in the second stage, what do you do in terms of follow-up? So of course there is micro and macro prudential policy. If you identify a climate-related transition problem in an individual bank, you can use the micro-prudential tools, in particular the S.r.o exercises, where you look in great detail at the banks. On the macro-pru level, there's a lot of discussion still ongoing. For borrower-based measures, we will present something actually in the afternoon. So that's the first big block. The second big block for central banking, this is a classic central banking, is monetary policy. This is to understand what climate change actually means for inflation, for growth, for potential growth in the economy. It's probably a little less relevant here. Surprisingly, this is sometimes less advanced than the work we're doing on financial sector. So I think there's a bit of catching up to do. The third area that's quite relevant is the investment of reserves. So this is a big topic in central banks. We have substantial reserves, of course. Typically, they are invested in a very conservative way. This is the way how it should be done. But of course, there is some room potentially to tilt that towards green assets. So this is also a very lively discussion that's going on. So actually, it's such a cross-cutting topic for central banks that, for example, at Národná banka Slovenska, we set up a climate committee to coordinate this, to make sure everybody in the bank is on board and understands what's going on. And I would leave it here.
Thank you very much for this great overview. Let's move to Adam. Could we go a bit more into the financial stability interlinkages with climate risks? Could you tell us also about your experience in working on this from the perspective of your bank?
Yes, for sure. I think there are many good examples in the last decade in the practice. So unfortunately, about 10 years ago, it was more like theoretical work. Now we have a lot of experience in practice. I think we heard the OTP in the morning, and it is not a surprise that they started to be so active on the market and land sustainable projects. And it is not just a marketing, although it is a good marketing, but it is not only about marketing, but for sure we see as a positive side result that the credibility of the institutions is a very important factor in keeping the stability of the financial sector. So, for example, during the SVB crisis, you could realize that in few days of time, so any bank can collapse if they lose their credibility. So it is a one factor. But to give you some more ideas, in the last 2 years, we had a huge drought in Hungary, which affected the whole agricultural sector. So this was one issue which we have to focus on, because agricultural lending is, although not the biggest part of the lending portfolio of the banking sector, but it's still significant. And this year, what we have faced is the new type of sicknesses for birds and pigs and cows in Hungary, which also has a very strong effect on the agricultural sector, and it has a strong linkages with the changing climate, as we have realized during the pandemic, that this type of phenomena will be more regular than before. So these two are just two examples. What can be the effect on for example, on the agricultural sector, but there are many different other things which may affect different sectors, like physical effects. Let's think about the the wildfire tally, it was this year or last year, which also collapsed a lot of infrastructure, which may have been collaterals between any loans and can threaten the stability of the financial sector. And last but not least, the credibility of the central bank is also a very important factor. And actually, we had an analysis few months before on the sustainability activity of central banking and its effect on credibility in the society. And we could show, based on a survey, that the sustainability or activity on the sustainability field has a very positive effect on central banks. So on one side, it's a good marketing. On the other side, as the society believes and trusts more those central banks who are active on this field, our policy making, our regulatory work, our supervisory work will be more effective because of the stronger trust what the people put in the central bank.
Thank you so much. And I was very intrigued also by the last point you had on credibility and trust, which I think requires further digging. And you showed also the real effects and the illustrations, which I think are really important to get back into why are we doing all this. So we'll continue our travel. We started in Central Europe. We're going to go to London now with a view on Europe, still Europe, and then we'll close with Mariam on the perspective also from Georgia. Agnieszka, you work for CTEX. You're going to tell us a bit more, if you wish to, about this newly set up center. And that gives you a really broad perspective on how central banks in Europe are looking at climate risk. What are they doing? What are the tension points? What are the pressure points? Also across the board, on the prudential side, microprudential, macroprudential. So what's your feeling having been engaged this past year with so many different actors about the temperature? Is it are central banks and supervisors generally keeping on to march on towards a transition? Is there a sort of cooling off effect, or is there a bit of a backlash in Europe too after what happened in the US? That's too many questions probably already, so feel free to begin, Truth.
Quite a few. Thank you so much, Pierre, and thank you, of course, to the International Sustainable Finance Center for inviting me and organizing this very, very timely panel. It's a pleasure to be here. So just a few words on CTEX. Like you mentioned, we are a new sub-center created within the Grantham Institute of the London School of Economics, working specifically to support central bankers and prudential supervisors, financial policy makers in integrating climate change and environmental degradation concerns in their activities. And we have a little bit of a broader global perspective also. So we work with partners in Europe, but also Latin America, Africa, Southeast Asia, which I think is very helpful also to bring into this discussion, because I think from a global perspective, we have the sense that, since in the US there is this pull back, maybe a little bit more of a cautious approach to integrating explicitly, at least, climate change and environmental considerations in prudential and monetary policy, that this has a spillover effect globally. Whereas you can actually look at this from another perspective, that a lot of the actors felt that they were being held back by the US in this respect. And we actually see a lot of movement and a lot of innovation also when it comes to financial policy, when it comes to integrating of climate change considerations and monetary policy in Latin American countries, in Asia, China specifically. So all of these jurisdictions that are also experiencing the tangible physical impacts of climate change in the near term. But I mean, we keep every time, like I think we were in a similar panel last year, and we were also discussing, long-term physical risk. I mean, all of this is baseline. This is not stress testing physical risk impacts, right? So we have to also remember that. So how much more severe our stress testing needs to be actually capture the physical impact. But moving a little bit to this changing environment, because I think it's from a European perspective where we feel that now there are these multiplying challenges that central bankers need to address. This is not only about in financial stability and in that context integrating climate change considerations, but also balancing this policy against other types of challenges, such as security challenges, competitiveness and growth objectives in central banking activities. We have these creaking international fora for multilateral cooperation. So if we think about Financial Stability Board, for example, which was providing one framework for cooperation between central banks on these issues, now it's stepping down a little bit, this collaboration. And within Europe specifically, we have this rollback of regulatory initiatives that were intended also to support central banking policies. So like the omnibus, which we will also discuss in a session coming up at 1:30, where the ECB's opinion on the omnibus rollback is really telling about the difficulties that the financial sector will face in the absence of generally reported, publicly available data. Now, in this challenging context, the credibility problem that a lot of central banks face is not just about trust vis-a-vis the population, it's not just about whether they are being perceived as caring about the environment, it's really also about whether they are able to stay true, quote unquote, to their task of overcoming the time inconsistency, which is one of the reasons that we set up central banking as independent authorities in the first place, right? So the reason we have central banks is because we know that the political cycle leans one way, but the long-term public interest, and in this case specifically integrating climate change and environmental degradation considerations, which have physical impacts that we know are happening into how they design their policy. So you can also look at the central banks that deny this as a very dangerous ideological position that is also undermining long-term ability of these organizations to achieve and stay true to their mandates. Now, the last kind of point I wanted to make, and in terms of how central banks can remain credible in this environment, is to maybe take stock a little bit of the progress that we have made. Because even if we look at the supposed rollback of global cooperation around these issues, global cooperation of central banks on the topics of climate change, there has been a lot of progress that is here, that is going to stay, regardless of whether explicitly climate change and environmental degradation considerations are held high on banners of organizations, right? So we have this new understanding of specific risk types, physical and transition risks as material risk drivers that are relevant at micro level for credit, market, operational risk that are relevant at macro level for broader financial stability considerations. We have this more elaborate conceptualization of the transmission channels. So what are the causal links between climate change factors and financially material outcomes? We've integrated an extended time horizon into a lot of the central banking tasks, whether that's on the supervisory side or on the monetary policy side. So a lot of innovation happening there also, like mentioned by colleagues. And finally, we have developed new tools, specifically transition plans, as an obligation that is really taking root in the financial sector in Europe, but also beyond. And we can come back to this. So all of this is here to stay, regardless of the turbulence, it seems to me. Thank you.
Thank you very much also for putting a more hopeful note than what I was formulating initially. In terms of the track record, what has been achieved, the different tools available, also some data coming in, but perhaps data gaps, and we might touch on this, are still around, of course, and transition plans, which we may revert back to. Mariam, you have listened to some of the perspectives from selected countries in Europe. Does that echo the work that you're doing in your central bank and the sort of analysis and the analytical tools that are available? are the mandates comparable? Your turn.
Sure. Thank you very much for inviting me to this panel to contribute to this very interesting conversation. Now, listening to my colleagues, there is indeed a lot of consistency between the actions National Bank of Georgia has taken to develop sustainable finance framework and the leading central banks. There are additional challenges, obviously, that the National Bank of Georgia came across given the characteristics of the country and the perception of the market about the climate change in general and the risks associated with it. So we started working on sustainable finance framework in 2017. Back then, awareness was one of the big challenges. So to support market in terms of improving their awareness and also set out the plan for ourselves as for the market, we actually developed sustainable finance framework, sustainable finance roadmap under the sustainable finance framework, which listed out all the actions that National Bank of Georgia was going to do in next 4 or 5 years, and we stayed very committed to that plan. So what roadmap did for us was that it kept all the involved party very disciplined. It also gave insight into the market. So this is what we are doing. This is what is coming. So on your own, you also have time to prepare for it. Also, it allowed us to work in a very systemic manner. So the pillars of the roadmap included the challenges that we had. So we had to tackle the number one challenge back then was to increase awareness. Then this is the first pillar, was targeting exactly that. Then was the supporting market to guide finance towards more sustainable projects. Managing ESG risk was the next panel, and the last pillar was all about transparency and the discipline. So throughout the years, we have followed a lot of things we have listed in our roadmap very successfully. And last year, we actually finished working on all the actions provided in the roadmap and established a new one. Just to name a few of the things that we have done under this roadmap and the mindset that we had when we were doing those things, we did not want to impose additional burden on the market, but rather be supportive hand to them. So if we, for example, we introduced ESG disclosure requirements in the corporate governance code, and at the same time we developed ESG disclosure guidelines and the corresponding template that helped market to do the disclosure in the first place and also to do it in a comparable and consistent manner. So some banks, even before that, used to do the ESG disclosure, but obviously they would prioritize what their selling point, while having the templates in place and the guidelines ensured that it was done in a consistent, complete, and comparable manner. On top of it, we required through the corporate governance code to do ESG risk management as well. And again, we provided market with ESG guidelines, which was created inconsistent with international standards, while tailored to the needs and the characteristics of the domestic financial sector and the Georgian economy. One of the big products that fall under this framework is sustainable finance taxonomy. So obviously the first thought there was maybe we should adopt the one which is already out there, but again, taking into consideration the practicality of the existing taxonomies and the needs of domestic market, we decided to develop our own taxonomy. Also, the Georgian financial sector is 90% banking sector based, so we needed the taxonomy that better suited that fact that the most of the debt is issued in forms of loans in our country. So it had to be a taxonomy that would fit the loan issuance better. Mm-hmm. So we developed green and sustainable taxonomy, green social, well, in general, sustainable taxonomy. In more recent years, we also created climate risk radar, which measures the exposure of the sector to the climate risk. This was also the tool that was provided to the banks. So we did this on the aggregate level, but the tool was provided to banks. So individually, they could employ tool to measure the exposure to ESG risk.
Many thanks, many thanks. We'll go back to these two examples you mentioned, in particular perhaps is the taxonomy.
Yeah.
Thank you. I hand over to Agnieszka for the second part moderation. Thanks a lot.
Thanks, Pierre. Thank you so much for the first interventions. And I would just have a few kind of questions digging deeper into a little bit how you would assess as central bankers designing and implementing and thinking about these policies, integrating climate change considerations in central banking activities. And I would start with Adam. So the Central Bank of Hungary is perceived as an innovator in this space. I think that's very clear, whether it comes to the different policies to support green mortgages, for example. And could you maybe give us a little taste of which, kind of looking back on the last, is it 5, even
more, I think.
Yeah. So looking back at this time, which policies do you think were the most successful? And maybe there are policies that you think you could improve, or maybe now you would design differently. Thanks.
It's a tough question. So let me give just some ideas about the framework. What we have started to do about 6 or 7 years ago is that we started to go through all the activities what we do as a central bank, and we try to find the opportunities where to step in and turn to a sustainable way. And the plate is so big as a central bank you could never imagine. So we went from our operation through the activity on foreign reserve management to collateral management and to direct regulation of the banking sector. And this is the reason why I said it is hard to say which was the most successful, and it's hard to evaluate those different activities because, for example, in foreign reserve management, I think it was a big and important step to build up a green portfolio, but probably it is not. It hasn't had the biggest effect, especially if we go or if we focus on Hungary. But I think what is important is in the regulation side is that the approach what we are following is that we are trying to give more like some positive incentives, and this is the reason why we think they can be effective, because the banking sector is not intended to circumvent this type of regulation, but they are more incentives wise to be part of it, to use them. And my opinion, and truly it's not a central bank opinion, but what I see is that probably the best measures are those which has a most direct effect on the customer. And in this sense, I think the borrower-based measures can be among those which work the best. Because, for example, we also have green capital requirement deduction for those loans which are green, but it is very hard to assess whether this more favorable capital requirement at the end reach the customer with a lower capital cost in the spread what the banking sector or not. But in case of borrower-based measures, we can truly see that for those type of mortgages, the customer will feel and see the more favorable or looser condition what they can get. So although we started the borrower-based measures just this January, I'm very comfortable with this, and for sure, as I'm responsible for financial stability, is also very important, and this is the reason why I can be comfortable and I can feel successful at the same time, that we are following a step-by-step approach. We have never done anything very big at the same time. So in every type of regulation, we follow this approach, which means that we are not threatening the financial stability, but at the same time we can reach results and we can test these directions.
Thank you so much, Adam. I also hear a lot about kind of coordination across different functions, right? So monetary, supervisory, micro, macro, which is easier in some contexts, more difficult in others. And with this, I wanted a little bit touching also on the borrower-based measures maybe, but ask Rainer about innovation in this space of kind of central banking toolbox, right? Because we really see this also. And I imagine also coming from a research department, this is also where some of the innovative thinking and these aspects would be generated. So do you see space for kind of regional specific innovation in terms of central banking policies, given the specific challenges that the region faces, either on the physical or transition risk side, in a very particular and insecure context?
That's a good question. I mean, at the end, NBS, of course, we are operating within the Euro system, so that gives us the framework, but there are some functions where we are indeed completely independent. And when it comes to macroprudential policy, that's borrower-based measures. And in this field, yes, I mean, together with Hungary, together with Latvia, we have, well, not together, but at the same time, we have made some innovation that we try to make sure that borrower-based measures, which are there, of course, for financial stability, do not become a stumbling block when you want to retrofit your houses and when you want to accelerate the transition in the building sector. So that's a very concrete example. Are there others? Yes, I could imagine this, because we are still, of course, structurally, to some extent, in different circumstances than, for example, Western or Northern Europe. That was also very nicely shown, I think, in the previous presentation, when you look at the sectoral structure, when you look at intensity of energy use and so on. So yes, why not? That can happen, but I think one thing that's important here to keep in mind is that such innovations have to take place within the mandate of the central bank. And there's, of course, quite a difference between the MNB and the MBS and the other central banks in the region, simply because the MNB has it in the mandate to support the transition. And we do not have this. So whatever we do has to be fit under our mandate, which is, of course, price stability, which is also financial stability and a few other things. But it has to be, so it has to fit with that. And there is one point where I would like to qualify a little bit what Adam said before about the confidence effect and the reputational effect. I hear what you're saying, and I understand that. And personally, I think I would agree with this. But you should also keep in mind that, for example, the ECB has come under a lot of pressure during the high inflation period to say, look, focus on what you actually should be doing and don't stress so much other things. I'm not saying this is right, but I think it's something that has to be taken into account.
Yes, although, I mean, there is also a lot of discussion about impact of climate change on primary, right? So, you know, if we can't grow things might get more expensive. And also maybe on the lawyer has to come out, so the ECB opinion on the MNB mandate change very clearly says there is nothing new here. This has already been in all of the central bank mandates before. But I mean, I think this tells us a lot about how the interpretation of the mandate is also really important, regardless of what lawyers might think. Maria, coming to you for last question, I was very interested in how you were describing how you were trying to be supportive towards the financial sector. So it seems to me that especially in more kind of developing, like emerging market context, you can also think about how sustainable finance and integrating climate change and environmental considerations can accelerate development of new products and maturing of the sector. And I was wondering if you could tell us a little bit more about how you were cooperating with different actors, with banks, but also maybe government around these themes.
Sure. So the procedure for any kind of action for at the National Bank of Georgia had the following setup. So let's see what are the challenges that, let's say, the market is facing. Can we address them? Can we help market to address them? Even if we take one of the major products in terms of sustainable finance, which is taxonomy. So when we talked with different banks, what we found before establishing our own taxonomy was that they did use different taxonomies. There have been the cases when within one financial institution, there was usage of more than one taxonomy depending on IFIs they have been working with. So that was the challenge that the market was facing. So that's why we thought, all right, so putting one taxonomy in place, which is user-friendly, would improve the issuance of green loans and sustainable loans big time. And indeed, when we issued the taxonomy, we issued corresponding taxonomy regulation that went into the force starting from 2023. And when you compare those 2 years, the issuance of green loans around the same time has gone up by around 70%, which was like significant improvement. So also with ESG risk guidelines, that was another area there was a lot of room for interpretation and a lot of challenges in the assessment of ESG risks. So that's when the ESG guidelines became handy. Even within the ESG disclosure, one of the things that we observed on the market was that it was easier to fill out the other parts of ESG template. However, the filling out the financed emissions was a tricky one. So it was, if you don't have the information to disclose, you leave an empty gap there. So we started observing that quite a lot. So what we did with the help of our international partners, we actually developed a tool for banking sector, which is the financed emission tool. So they could employ that tool to measure the financed emission, and they could again do that in a consistent manner. So when banks used the climate risk radar and they individually found out what their exposure, that actually triggered interest in some banks to do their own climate stress testing. We have done climate stress testing exercise. And again, we have disclosed most of the analytical tools we have used in the process, so the banks can also employ them in their own climate stress testing. And we have seen banks doing that now. So this is how the process usually goes: identify the challenge, try to tackle it, do it in cooperation with the financial sector, and so far it has proved to be quite successful.
Did you use in any way the EU legal framework? Were pieces maybe of the sustainable finance framework that is so complex? Are they useful?
We definitely, we want to make sure that we do all those things in consistency with the framework. So we have ensured the consistency while also tweaking and tailoring things to the needs of the market and the features of our economy.
It says conversation with the audience, so let me open a little bit the question. If someone has I see a few hands, so we've triggered some responses.
Thank you all. It's great to be with central bankers in doing some great stuff, because central bankers only really get noticed when it all goes wrong, and it last went wrong globally in the financial crisis in 2008, which, as I recall, there were still stress tests and nobody saw Armageddon until it was Armageddon. And what we've been hearing the last 3 days, is we know that so much of the economy can't continue from the science perspective, from the economics of transition perspective. And whilst it's really an absolute kudos to MMB, I think there's a real global leadership in terms of the stuff you do. But the incentives for the green stuff in a market for banks, where we've heard consistently there's more finance in that sector than projects, It's really tackling the borrower-based measures on the capital for the things which we know cannot continue. And then the question is, so what would it take? Because it's hard to be acting unilaterally. I mean, the Basel Committee is kind of a voluntary thing, right? And that makes it tough. But that was hard. It was the same dynamics in 2008. It's quite hard to choke off a bubble if you're the only one who's going to do that. So one question is really, what would it take to really move the capital where it hurts, the things which will really behaviorally change strategy? And the other part, which is in terms of mandates, because it was mentioned, I mean, yeah, there's mandates, and ultimately it's for politicians to do stuff too. But how scared are politicians? Because they've got memories of the aftermath of the financial crisis. And what they can't do is necessarily a policy which accelerates transitions if the banking sector is at risk because it doesn't have the capital where it matters. And that might not be in your mandate, but it must surely be in your conversation. And I'd love to have some insights about how that conversation is developing. Thank you.
Thank you so much.
Maybe we can collect a couple of questions because we're heavily over time. So.
Yes, hello, Lukáš from Česká spořitelna. I have one question for Rainer and Adam, since you are from countries falling under the scope of CSRD. As Agnieszka mentioned, that opinion of European Central Bank regarding that proposed, let's say, shift of employee threshold of CSRD to 1,000, and they say, okay, and I would like to add that the European Banking Authority has a pretty similar opinion regarding this. Okay, we can live 1 to 2 years without these data, but and we understand that the enterprises need to breathe. But now, anyways, we need the data. Otherwise, we won't be able to, let's say, fulfill our obligations of, let's say, economic and financial stability. So I would like to ask you, what are yours from, let's say, your national perspectives, or what's your opinion on the proposed shift of that threshold? Thank you so much.
And maybe we can take one more quick question. I think, Goran, did you have one at the back? And then maybe like 2 to 3 minute, very quick, speak fast answers.
I realize we're before lunch.
My question was kind of similar to the first one, actually. I was attending a conference in Canada a couple of months ago, where actually there were some reinsurers that were commenting on the existential and the climate risks in general. And actually their view on that was that it is coming quite uncomfortably out of their expectations, so that actually all risks related to the food security, migration, climate, etc. are actually above the average. And my question is actually from the methodological perspective, how the climate risks that you are doing in stress testing compared to those that reinsurers are doing, because there could be maybe some risk of a blind spot in that. Could you comment please on that?
Thank you so much for bringing also this perspective, because I think kind of the scale of the implicit subsidies to the financial sector for failing to appropriately integrate these climate change environmental risks is one of the big challenges of this discussion, which links back precisely to the great financial crisis as well. Reinhard, would you like to start?
I can start, because the last one is, I think it's very interesting. So what you need to do sometimes is go out of the comfort zone of central banks for stress testing if you want to capture these things. So what we're currently doing, this is an ongoing process at the NBS, is we're looking at flood risks in the country, and for this we are using really non-standard data. We're looking at sort of flood patterns over the last 100 years, really plot by plot in the whole Slovak Republic, and we try to see what can happen. So that's something that a reinsurer would probably do, and not at that granularity, but looking at this sort of data. And this is not something that you normally do as a financial stability person. This is also a bit relating to the first question. In a way, with the benefit of hindsight, it's always easier to say, well, we should have really known it. But in a way, the global financial crisis and the securitization that triggered that would have been easier, because this was all within the financial sector. Now we're really outside that. So it's a tougher task. And I think I'd like to finish on something that Agnieszka said. I think a lot of progress has been made. And I've been working on stress testing hands-on between 2011 and 17. And what we did in 17 was not comparable to what we did in 11. And I think what is happening now is, again, a different league. So I'm quite positive about the progress there.
I try to be fast. So on the second and third question, because I agree with Rainer that the question is, so we have to use new methodology, and what is good is that, for example, if we want to use some agent-based stuff, which may better than traditional modeling, we have the computational capacity, and it is a big advantage compared to what we had 15 years ago during the great financial crisis. So we made many steps forward, but I cannot say that we don't have any blind spot, especially since data requirements and the data, what we can collect data is far from what we would need to be as precise as possible. And what we see in those specific issues, like I said about different sicknesses in the agriculture, when we go deep in these cases, we always realize that it's much harder to understand what is happening in real life than we think it, and these stories are just 1-2% of the not of the economy, but of the specific sector. So when we think about the whole economy, it's much more complex. And get back to the first question. Make innovations from a central bank is very important in regulation, and I think we always want to go to the limit, but we have to understand that central banks has a very strong limit what they have to keep in mind during what they do, and I don't really think that central banks have the power in their hands to make very comprehensive solutions. We can incentivize directions, we can have influence on the market, but government and fiscal policy have more power in their hands. And just let me finally give an example. So we have started a lending program a few years ago, which was the green mortgage program, when we gave 0% liabilities to the banking sector to lend out on a 2.5% interest rate for A+ level or A level mortgages, so for homes with very good energy efficiency. And it was successful from sustainability perspective, but on the other hand, it is a huge risk as a central bank to make such programs, because the markets usually, or the markets can be tough with the central bank, and especially if you want to manage your own financial markets and your own economy, there can be very abrupt and short-term problems, although you want to reach a long-term good for the society. So I think from a central bank perspective, this is the big issue, and this is why we decided to make this step-by-step approach all the time.
Thank you, Adam. So many things to point out, but I would just say in 40 minutes we will continue this discussion in another room. Mariam, any last words from you?
So just a quick remark, climate stress testing is an important tool. However, the stress testing by design is kind of interdisciplinary, which makes it more challenging. So it definitely needs more development, and the results will update as the stress testing framework for climate will improve. And also, it's not the only analytical tool in the basket that can be used for assessing the climate risk. In fact, the one I have mentioned before, climate risk radar, is another one, and not all of those instruments display mild picture. But for the case of Georgia, for example, climate risk radar results are not mild, while for climate stress testing results are mild. So it's not only one tool you rely on. And when it comes down to the mandate, though we don't have a separate mandate for climate stress tests, climate change we always thought as a part of mandate, because financial stability definitely is the part of our mandate, and then a lot of risk that are climate risk can easily translate into traditional financial stability risk. So that has always been our take on the matter.
Thank you so much, Mariam. Also, these innovations in the climate change space presumably can be applied to other types of risks that were so far difficult to integrate in the framework. We don't keep you from lunch any longer. Thank you for your perseverance also. We head to lunch and we continue this discussion in 26 minutes.
Exactly.
Thank you.
That's how the hotel operates. Maximum we can start is 10 minutes late for the next session. So you really will need to get the food and eat quite fast. So don't delay. Go, 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 go. And all the photos from the morning and yesterday and everything are via the QR code, including an updated agenda. Thank you.